In this video, we're going to talk about the net asset value of a mutual fund. So we calculate the net asset value, which I just abbreviated here as NAV. It's just the fund assets minus the fund's liabilities. And you might be wondering, well, why would a mutual fund have liabilities? Well, some closed-end funds might issue debt or preferred shares or tender option bonds or some kind of derivative and so forth. So there might be some liabilities here, and we just deduct those from assets to get the NAV. And now that NAV is going to become really important. So if we're thinking about investing in an open-end mutual fund, for example, we first need to calculate what the NAV per share is. That's going to give us an idea what the buy-in is, right? What do we have to pay to get into this open-end fund? So let's say that the fund has assets of $5 million and that there are 0 liabilities and that there are 20,000 shares outstanding currently in the open fund. So what we're going to do is we're going to take the net asset value, which in this case would be 5 million because it's just 5 million minus 0. So it's 5 million. And then we're going to divide that by this 20,000. Right? So 5 million divided by 20,000. And that's going to give us a net asset value per share of $250. So what does that mean? That means if you want to buy shares in this fund, let's say you wanted to buy 300 shares. So you're going to buy 300 shares. That's going to cost you, what we're going to do, we're actually going to, so we're going to multiply that 300 by 250. That'll be what the cost is. But now we need to know, so that's going to be just in case you're wondering, that's $75,000. So, but we want to know what the new net asset value, is of this open-end fund. So what we're going to do is we're going to say net asset value is equal to the 5 million that we started with, but then plus we're going to have 250 times 300. That's 300 shares times that 250 per share. And that's that 75,000 that we talked about. So now the new net asset value for this fund is going to be 5,075,000. And the number of shares outstanding is going to go to 20,300 because this open-ended funds can be infinitely capitalized, right? We just keep adding shares as people want to buy shares, and what you buy in at is at the end of the day. And I should have mentioned this net asset value per share, that's calculated at the end of the day, and that's when all the purchases and sales of shares in an open-end fund take place. So with a closed-end fund, so we still can think about it as our net asset value per share, but the thing is the closed-end fund, the price that we buy in at is determined by the market, right? So the price is going to fluctuate. The price is going to fluctuate, and a lot. It's going to fluctuate all throughout the day, right? Price fluctuates frequently, right? With the open-end fund, we're thinking this is calculated once a day. This net asset value per share is calculated at the end of the day, and that's what your buy-in is exchanged at, right? So that $250 they decide at the end of the day, that's what the net asset value per share is. That's the price you get. Just that once at the end of the next day, they calculate something else at the end of the day, and they execute the trades at the end of the day. Closed-end fund is, remember, closed-end funds are on an exchange. They are on a stock exchange. So this price is changing as buyers and sellers come to different conclusions about what the value of this fund is. So in reality, the actual price that you pay for a closed fund, you could actually pay a premium, in which case that's higher than the net asset value per share. We call that's a premium. Say that closed-end fund is trading at a premium. But if the actual price is lower than the net asset value per share, that's less than that, then we say that the closed-end fund is trading at a discount. Now, you might think this is really weird here because you might be saying, let's say that the actual price, let's say that it was $1.10, and that the net asset value per share was $1. So what you have here is actually people, if assume this was the case, they're actually paying $1.10 for $1 worth of assets. And that might seem really foolish to you, or you might wonder, but remember, this is a closed fund. So the price is just on an exchange. This is just like a stock, a share of stock, like Microsoft or something on an exchange. What determines the price of the share of Microsoft at any given point in time? Well, it's supply and demand, right? So somebody might really, really want to own shares in this closed fund. And a closed fund isn't just going to increase the number of shares outstanding, right? Because remember, the shares outstanding is fixed. So you only get to buy in on a closed fund if someone wants to sell. So if that could actually drive up where you have to pay a premium, which is a lot higher than the net asset value per share. So just bear in mind with closed funds that the net asset value per share is often very different from what the actual price is. And it could not necessarily a premium. It could very well be a discount. Could be that somebody doesn't really have people don't really have a good belief about the person managing this fund, and they say, you know what, this is trading at a discount. You know, I just don't really like what this manager is doing, and I want to, people are wanting to dump their shares, and so that's going to drive the price down. But with an open fund, because it's not traded on an exchange, and because the net asset value per share, I mean, that's just calculated once at the end of the day. This isn't trading on an exchange. The net asset value per share is just going to be, that's going to be your price, right? So you don't have this issue with the actual price that you're paying. You're not going to pay a lot more. You're not going to pay $1.10 for $1 worth of assets, or you're not going to pay 80 cents for $1 worth of assets. So it's a very different way of thinking about the net asset value per share and how it affects and how it's relative to the price that you pay for an open-end or a closed-end